Good morning on this wonderful Tuesday today, August 27th, 2024. Hope everybody's awake, getting after it. We got about 2 hours till the market opens. And if you're not waking up, getting ready for the market, well, the market's just going to do things without you. I mean, if you're living on the West Coast and you wake up at 9, I mean, the market, it opens on Eastern Standard Time. It's already been open for a few hours, So you're really kind of coming in at the end, It's good to see the opening is key, especially at the New York Open. It's not key on taking a position, but it's key on watching the moves. I myself, some people, they have a lot of success on the open. I am not an open trader. So for me, it doesn't much matter where I live because I'm like a detective. I'm just going to come to the market, see what happened, and then investigate a possible area to go into. The time of day doesn't matter. I'm looking more of my particular setup. So what if you ever hear somebody say that, like I just said, if you ever hear somebody say that, oh man, you gotta trade the open, you can't work a 9-to-5 job, you gotta be in the market that time. That's a bunch of bull. Okay? The market is going on all the time, all over the world. Okay? You don't have to trade if you're like in the States, you don't have to trade during New York hours. You just don't. Okay? You just take your position when you can take your position if you see your position. The time of day doesn't matter. So, I don't know. That's just a silly little rant I had. Just something I had seen that somebody was saying, "Oh, you gotta trade the New York Open, man. If you don't trade that, you ain't ever gonna do nothing." That's just kind of misleading. You can trade whenever you want to trade, honestly. Alright, I had one pulled up of interest that I wanted to talk about, so now I guess I'm just going to have to search it. There it is. Alright. Interesting enough, I come across this yesterday when I was going through some different things. Tonix Pharmaceutical Company, TNXP, on the NASDAQ. Okay. Now, the reason it kind of piqued my interest was looking at the kind of all-time history of this thing. Look at this ridiculous history of this thing. At one time, it had a valuation of $142,000 a share. Are you serious? That is crazy. Okay, way back in 2014, I guess, around that time. How nuts is that? Well, we know that's not viable now. Something has happened with the price from that point. It had either they had done something with the value of their shares, on top of it being sold off so heavy consistently, they might not have the same amount of shares that they used to have. Okay, because when you have more shares, it devalues the shares. Okay, if you only have 100 shares in your company, well, each one of those shares is going to be worth a lot. But if you have 1 million shares, oh well, each one of those shares is going to be worth less. But in general, looking at this thing, this is a classic case. The weekly really portrays it right here. This is what's been going on for the past year, a little over a year. This is what's been going on with this thing, okay? A little over a year ago, it was like $125 a share. Now, it's like 37 cents a share, okay? And what it showed to me, I saw it yesterday, and I was like, oh, this is a perfect example to just put up and just talk about for a minute and show a perfect example of a trying to buy the bottom on something, and how it trying to be a bottom caller can just punish you over and over and over and over again, okay? Because everybody is looking in the past of this thing, and they're thinking, okay, it's got nothing but room for upside. Well, yes, it does. But what you're looking for is you're looking for something that is also showing a little bit of signs of life. Okay? The best thing to do is not to try and be an exact bottom catcher, because you will lose money over and over and over again on that. Okay? Here's how you're losing money on that. This green candle over here. Oh, and I just lost it. Pull it back up. This green candle over here to the left, they probably saw that. Ow! All right. That's the bottom. Let's go. Finally, this thing's going to start showing some signs of life. Nope. Pulled down. Oh, it's kind of consolidating a little bit here. Okay, this is the bottom. Let me buy that. Nope. It pulled down. Oh, look. It's making a little consolidation here. Maybe it's going to go up. Nope. Pull it down some more. Oh, look. It's curving right here. It's curving up. Okay. Oh, well, maybe it's going to go up there. Nope. It didn't break out. It broke down right here. Okay. It was making a little bitty flag right there, but then it broke down. The moment it lost that flag, you knew, okay, we're going for another leg down. So that was kind of viable, ever so slightly. But once you've seen that it broke down from that little flag there, you knew, okay, wow, this thing's just going to make another leg down. And then it went sideways, and then it took another leg down. And here we are at 37 cents. So that's what's been happening the past year. People keep thinking they're catching the bottom on this thing, and they keep getting put underwater. Okay? People were buying here at 47. They got dropped on. People were buying here at 29. They got dropped on. People were buying here at 16. They got dropped on. Okay? People were getting pretty confident over here at the $10 area. Okay? But they got dropped on. So, we're losing horribly on this thing. I don't say you. It's more of if you're purchasing this thing every time it paused in its downward movement the past year. Okay? If you are even remotely interested in trying to get something on discount like this, or if you think that the company's going to be around for a while, and you are saying, okay, this is a great price, I want to get in here. Okay? The best thing to do is to look for some signs of life and then get in on a rebound from that. So for example, say today it starts to go up and it starts breaking this high and this high. Okay, it's shown a little bit, a spark of life. It's not consistently bleeding out. So then you might want to get like a bounce from here and then maybe ride it up to here or even further, depending on what your analysis is showing you, you know. But this is just kind of my example today. You know, I don't know anything about this company. It could be a great company, you know. I have no idea. I'm just going off the chart and what's been happening in the past year, okay? You have to let something show you that it wants to go somewhere. All right? It's difficult in trading because in trading you get set in your mind, oh, I want it to go up. I want up now. We want up now. But it actually, if you just relax and look at it, it will give you the hints of that it doesn't want to go up. It wants to go down. Vice versa. Okay? But people, they get set in their minds that they want something a certain direction, and they ignore the signs that the chart is giving you. Okay? It's not as unforgiving as you might think. It's not so doom and gloom as you might think. It gives you the hints and the telltale signs of it wanting to come to life. Now, are you looking to get a little bit in this company? Great. Hey, you do whatever you want to do, you know. Personally, I'm not even interested in this for my portfolio. Not one bit. Not until it shows a little signs of life. Okay? We start moving up, and then we have a little pullback. Okay, I might be interested, but it's not showing me anything that's piquing my interest. Zooming in on the daily on this thing, look at how ugly that is. Sure, we have a little couple gaps above us, but I guarantee you there's gaps all the way going up on this thing, forever and ever. This thing's been dropping so hard, there's probably 1 million bullet holes in this price action. So it's just kind of how I'm foreseeing this thing, you know. It's not going to surprise me. This thing keeps bleeding out, you know. You're down in the pennies range now. You're in the cents. So a lot of times when I'm looking at something and it's down in this price range, okay, of playing with the cents, you have to think about your percentages when you're purchasing something that's trading by the cents. You buy something for 30 cents and it just makes a little move up to 60 cents, well, you've already doubled. But why would you be risking that? Even just up to here. Say we have a little recovery right here. That's $2. That's a potential 5 times your initial investment if it was immediately to shoot up from here to here. Doesn't look very big on the chart. But what's giving you any idea that you think it's going to go up? I'm just saying, when you're looking at these things, when you're trying to find these values and these deals, you really want to see a little bit of sign of life, and then a pullback, a nice quick touch of a demand area, a liquidity block, aka a support area. You kind of want to see a quick touch of that, and then that's when you get in for another leg up, just to take out the next high. I'm waiting for it to take out a high and make a lower high before I consider it taking out another high. Okay? I'm not touching this thing if it's going to continually keep making lower lows. The weekly chart, the perfect example we just discussed. Lower low, lower low, lower low, lower low, lower high, lower high, lower low, lower high, lower low. It just keeps dragging down. How much negative is your position on this company if you've been gobbling this up all the way down? Only a miracle is going to save you to get it to go up. So you got to watch it on some of these things. You got to watch it. You got to get a little price action under your belt. And the best thing to do is to wait for something to show a little bit of signs of life before you consider touching it. Volume's only 164,000. Market cap's only 8 million. I mean, this thing's in the pits. Okay? So you have to consider that when you're looking for deals in the market. I love everybody. Have a great day. Stay safe. Keep calm. Know your setup. Take your time, and I will talk to everybody later.